You know, I wonder how the real estate market's doing. Oh, is this a report from the S&P? That's pretty sweet. Let's take a look at it. Wait a minute. Wait, the market's going up? That's just... Okay, there's a little dip. It only goes to March, but actually it's not really going anywhere. I mean, isn't there like a pandemic going on? Isn't there supposed to be like foreclosures and short sales and just pandemonium and doom? But this doesn't show any of it. You know, actually, it's looking like the real estate market is doing exactly what I said it would. Oh, is this it? Oh, I get to do a speech. Okay, well, and a trophy that's a cactus. I'd like to thank the Academy. But in reality, I'd just like to think rock solid real estate fundamentals. And this beautiful Jenga structure represents the real estate fundamentals, which are lending requirements for actually buying a home, interest rates, supply of homes actually for sale, and this little puppy, the one I haven't heard any of those other podcasts talk about, which if you're listening to other podcasts, YouTube channels, and everything else, can essentially be summarized as this. Pent-up demand, buying frenzy. The spring buyers and sellers will become the fall buyers and sellers. Supply, demand, supply, demand. I have noticed that none of those videos are covering this part, let alone actually connecting these parts together and understanding what a fundamental is, but we'll get into me being jaded about that in a minute. Is building cost, because in 2008, building homes and prices and everything worked very, very differently because of lending requirements. And yes, supply and demand very much so are really affecting the prices of the homes, as they always do. But supply and demand are people taking their homes off of the market and creating all of this pent-up demand to buy and sell are not the fundamentals. They are the result of the real fundamentals, which is what I'm trying to make oh so clear. To simplify, people are confusing the result with the cause. And so that's why in this video, we're going to be going over the most relevant fundamentals that have kept this real estate market economy afloat. And maybe some of you are wondering, well, Bob, where is demand? You can't just skip demand. Well, this isn't really demand. This is demand, because you need a very strong fundamentals in order to keep demand afloat, you see. And the more demand there is, the higher it goes and affects home prices the quickest. But also, if you don't have the fundamentals correct, demand can basically make everything fall down. What's up, you guys? This is Bob, and thanks again for tuning in to my little channel. I really do appreciate it, and I'm excited to be sharing how this stuff works. The reason why I've selected this subject is because I am a real estate broker. I have a degree in real estate, and I have brokered hundreds and hundreds of investment properties. I have bought them, I have sold them, and I have worked for the largest private equity firms in the world and some of the highest net worth individuals that you ever gonna meet. So I do hope that I know a thing or two about real estate. I don't know why I went that direction with my voice for a second, but one thing I do know I need is a haircut. Thank you, settlement in place. That's really getting old. But anyway, let's get into it, guys. Thank you so much for being here. Please like this. Please subscribe if you like this content. And please leave a comment. I'm always looking at the comments. I promise I will respond to you as best I can if you put something up in the comments. So, all right, let's get into it. So let's start at the bottom, which is stricter lending requirements. And the reason why we got stricter lending requirements is because, well, because of 2008, and wouldn't you know it, holy cannoli, America actually learned something for once, which is you can't just pull an Oprah and start giving everyone a house. You get a house, you get a house, you get a house. Why not? Because yes, the lending process was essentially just as difficult as smashing the like button, and when the like button turns blue, that essentially means that you're approved for a house. But since then, loan officers, mortgage companies, mortgage banks, brokers, what have you, all have had to start signing people on way more strict guidelines. And because of this, the quality of the homeowners, wouldn't you know it, went up, making it far harder for the whole thing to fall down. And one of the biggest reasons why all the houses started to really begin to fall is because if you have 2 or 3 neighbors that are in subprime lending and they all sell for like $1 on your house, well then guess what? Your comps are now destroyed, meaning even if you're a great owner and you're totally fine, you get destroyed too. And one of the leading pieces of legislation that helped make this happen was Dodd-Frank. And as someone actually in multifamily, I will say, yeah, that got kind of annoying sometimes, but because banks had to have higher reserves of cash and whatnot, it did make it to where this was more stable. And over time, these loans and these homeowners have only grown stronger because the amount of equity in people's homes and their savings accounts for homeowners have gone up over the past 12 years, thereby fortifying the entire thing even more. And because they have these extra savings, because they have this extra equity, they now have the option to take their homes off of the market in spring and then be able to wait into fall. And this was not in the case in 2008. They just had to fire sale the whole thing. And what's making this even easier for existing homeowners is, bam, the lower interest rates. I mean, interest rates are at an all-time low. And by all-time low, I mean all-time low. This is low. But given the situation, it is actually pretty helpful. And if you're looking to refi and worried that you might have to actually go into forbearance eventually, I do suggest you actually watch this video because it shows you that if you refi now in a certain way, in a way you kind of get your own mini forbearance program. It might help you. So here's this video. Okay, now let's get to the builders, because this one you probably haven't heard a lot of yet. And this one is actually one of the most fundamental ones, because builders back in 2008 were also greatly affected, as you might imagine, because they're building like crazy back then. They were going boom, 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 house, house, house. And then everything just stopped because, well, now people can't get homes. The ones they were selling are now worthless. Their inventory is garbage now. And now, moving forward, people can't just buy 3 homes, even if they have just a part-time job. And because housing prices couldn't just keep going up and up and up, they couldn't get the same financing they were to just keep propping up more and more houses. Fast forward to today, the main things that have really slowed down building today is 2 things: fear and costs to build. The first one being fear, because a whole lot of those builders went bankrupt in 2008, as you might imagine. And now today, building a home is actually very expensive because labor costs have gone up and the material costs have gone up as well. But the main thing is really the labor cost, because the thing that has gotten better over time for major builders is they've really started to streamline the process. Heck, you can even sort of start 3D printing houses, believe it or not. But even with all of this streamlining, the pain of what happened to them in the past and the fact that the margins are still really, really thin has made it to where there are not tons and tons of houses on the market to buy in the first place. In reality, it's a lot of just the resale market, basically people buying and selling homes that someone has already lived in. And if there were tons and tons of houses being built over the past 12 years, this would not be as easy to control given what's going on. It'd be way more bloated, there'd be way more houses, and you'd need to depend on way more people being able to pull their homes off of the market. But because there is way less homes in supply in regards to the demand, this was relatively easy to fix. And again, because they were able to do it in the first place. So what I'm trying to help you understand is that there's actually 2 sources of supply. The main one is actually how many houses exist due to the number of houses being built by builders, and then the number of houses actually being sold or put onto market. And it is because of the fact that both are able to basically lock down and not have tons of it. We're getting a lot of markets, like in my market of Phoenix, Arizona, to where supply is so low, even if you cut like demand way, way, way down, we would still not be anywhere near a balanced economy where there's 1 house and 1 buyer. Not even close. And it is to a great extent that a lot of cities like Phoenix and other primary cities in general have been growing, which is why all of these cities have been pushing up in price. Phoenix being the number 1 to grow in home price. Told you guys, boom! Yeah, baby. So now that you understand at least a lot of the major factors as to why the market has been acting the way it has, what is going to go on moving forward? Well, basically what will probably happen, because this S&P report ends in March, which does not truly reflect what's going on with the pandemic, it is actually very likely, and I'm already seeing it, that prices will dip a little bit. But by the end of Q1 of 2021, I'm thinking that most of the primary markets in America will be back to where they are, if not already by the end of 2020. And forbearance rates will continue to rise, but actually understanding the effects of them in the greater market is hard to tell, because the HEROES Act is currently being discussed about in the Senate, and if it does pass, it would make it to where forbearance can be pushed out an entire year before people holding the note on the loan would actually need to start getting their money back. And so if it does get pushed out this far, how it affects the market, things going up and down, we're just gonna have to wait and see. And yes, it is very likely that buyers will begin to start pushing back into the market. And in fact, they already have.
because a lot of them are trying to take advantage of what they perceive to be lower prices, and they are inching down a little bit, so there are little deals out there for them. And they want to take advantage of these interest rates, which a lot of them think will go away very quickly. But a lot of people in the feds and everyone else is actually saying that they will keep these lower interest rates for a while until we have recovered, whatever that really means. And yes, these sellers, because they are in a good position overall, will continue to gauge whether or not they actually want to sell in the first place, or just take advantage of the better interest rates and just stay where they are now. And loans themselves will continue to be strict. Actually, if anyone was really paying attention, you'll see that they were starting to loosen up here and there, making it to where there was 0 down payments on this and that, and this program and that. But I think they got bonked on the head pretty quick with this everything going on, so that should probably be locked back, which is probably a good thing. And lastly, the rental market, which I guarantee will do something. But I'm gonna do that for a whole other video, because that is going to take me even longer to cover than this thing. So I hope you guys enjoyed this video. Please stay tuned. I'm gonna be doing a video on the rental market coming up. And hey, if you like this, if you found me tolerable, please subscribe. And if you got some questions, comments, think everything I said was stupid, I guess you can put that in the comments too. No one's gonna stop you. And if you are an economist or know a whole lot about this as well, please understand this is a YouTube video. I simplified a lot of stuff, and yeah, there's a whole lot more gears going on to this, and we'd be here forever, and no one's interested in that. So anyway, I hope this was helpful to you guys. I believe that we will get through this market. I believe it will start pushing through, and it already is, quite frankly. So it's gonna be, overall, unless something crazy happens, it's gonna be good sailing ahead. So I hope you guys, I hope it all works out for you guys, because I think the wind will be pushing with you, not against you, in the years ahead. So all right, guys, thanks.